Here's our daily chart on Apple. It goes back about 4 days. For the purpose of this discussion, we're going to focus on this day right here, which was this past Monday. Market had some weakness to it. It opened up low. Apple did the same. Actually showed a lot more weakness than the general indices did. And after this first 30-minute period here, you could see where it started staircasing itself up with some very narrow range candles. Finally, we were able to get a break of this candle right here. We put our short entry price right below this candle, and then we put our stop loss right above it. And that entry price was triggered in the following 30 minutes. Didn't do nothing for the next 30 minutes, but then we got our breakdown that we were looking at, and you can see where the stock just really started decelerating at a rapid pace. We got out, I believe, at about 139.77, so right about here, and that was at about 2.5 R, so it was a great trade. That's always a great day at the office when you can get those kind of gains, and you would have wanted to keep moving up your stop loss as the stock continued to drop, because as you can see here later in the afternoon, we got some pretty intense program buying that brought it up almost to its previous day's close. So perfect example of why you always want to use stop losses. When you have gains, you always want to keep moving up the stop loss and tightening in it so that you can preserve those gains, so when you get these end of day reversals, or that you don't lose all the profits that you worked so hard for during the day. Here we have our trade for today. It was research in motion. What you're looking at here is a 4-day chart using 30-minute candles. For the purposes of this discussion, we'll focus on this day right here. We're looking for a good setup to the long side, as RIMM was basically outperforming all the major indices, also outperforming its competitors like Apple, and also performing the likes of Google and then others in the tech industry. So definitely had our attention. We wanted to get into the upside, and we got just that opportunity here with this doji candle that was formed here. We put our entry price right above the top of it and put our stop loss right below it. It was triggered in the following period, and we were able to ride that up for the remainder of the day. As for where we got out, we got stopped out right below this doji candle right here, because we're a little worried about there possibly being a late day sell-off. So we put our stop loss right below that candle there when it was formed, and consequently you can see that this candle here went right below it before finally taking off up to as high as 86. So overall, it was a good trade. You could have netted over 2.5 as a risk to reward ratio if you were able to hang in there that long. As for us, we gained about 0.6, 0.7 on the trade.